about 11 days ago, that is as of the 13th of October, Thursday the 13th of October, we brought you a piece written by Rocky White. He's a senior quantitative analyst at Schaefer's Investment Research. He observed that the VanEck Semiconductor ETF has since become a leading indicator as to which direction the SPX, that is the S&P 500, the direction it is going. So in other words, the sector is a good measure, that's the semiconductor sector is a good measure of the health of the overall US economy and can signal bullish or bearish times ahead. So he went on to conclude that in conclusion, the semiconductor index has been a dependable indicator for stocks going forward. When the SMH, the semiconductor ETF, underperforms by a lot over a 6-month period, it has paid off to bet on a downside for stocks over the next few months. When SMH has beaten the S&P 500 by a lot over a 6 months period, it has made sense to bet on further gains. So of late, when he wrote that piece, he noticed that the S&P 500 had this SMH ETF had fallen below its 1,000 day moving average, which didn't happen even during the pandemic. And that's the truth. This line represents that 1,000 day moving average, but it has since also risen above it now, even above its 10-day moving average, as well as its 20-day moving average on its daily chart. So things are gradually improving. You may have also noticed, you see, the Dow was up 1.34% for today, the 24th of October. Nasdaq up 0.86%, S&P XVX up 1.19%. So coming back to the chart, you can see we can show you that comparison we have. This is this orange or something like that. I think it's orange. This orange line is the SMH. You can see that it is just for some time now, the only time it was below, it was trading based on this comparison below the SPX was as of early this year. As of early this year, that was also when it probably was indicating that the market was going to plunge. You can see that it was underperforming the S&P 500, but of late it has now risen above it. So it's also indicating maybe things may start to improve. And of late it has looked up from the 12th of October, just a day before that last video we made concerning this ETF. It started to look up, a debate correcting at various times, printing higher lows, so, and you can also see that is also still the case. You can see that it's almost as if it is just printing the SPX at the same time as well. You can see that. So the SPS it's looking up, even though we're still in a bear market. But what is absolutely certain is that statistically this has not failed. SMH has been, we can see that statistically that it tends to point to which direction the market might be going. So this is just an update in that regard. Yes, and currently it is down 16.45%, and XPX is down 30.95. So it's currently outperforming the S&P 500. Maybe if it lasts longer, based on what the author of this piece indicated, maybe with time, or at least over a 6-month period, then maybe it might indicate that maybe it might be wise to bet on the stocks recovering. So over the last 6 months, we'll be all the way back to May. Where was it? Yeah, all the way back to May. Yes, so all the way back to May, the SMH has actually outperformed the XPX. So maybe things are gradually it might be wise to bet that stocks may improve, and of late the stocks may have improved. But this is not to say that the market has now reached the bottom or anything like that. But the reason for this update is, you know, to update you on this. The reason for the update is to, you know, still show that statistically that it's this theory is still very much valid and still working at the moment, you know. So see what you make of SMH and how it's how it relates to your trade, and whether you're going to use it as a barometer as to which direction things are going. And thank you very much for watching this video.